Hi everyone, I'm Matt from Look Into Bitcoin, and today we're going to be looking at why a simplistic approach to your Bitcoin investing is usually the best way to do it. To do this, we'll be using a number of resources all freely available on lookintobitcoin.com, your number one source for Bitcoin information. If you haven't already, don't forget to like the video, subscribe to the channel and turn on notifications to ensure you're receiving all of our content as soon as it's released. So right now we're just on the Look Into Bitcoin site, and a lot of the times for new users you may look at all the charts we have available and be a little overwhelmed at exactly which charts are best for you and your trading and investing. So today we're going to just look at how a simple approach and just using a couple metrics can often be the best way to do it. So to begin with, we'll be using the Pi cycle top indicator. And this is one of our simplest charts, but one of the most effective at calling price cycle tops. Now, if you haven't used the Pi cycle top indicator already, it is pretty simple. It is just using a 350-day moving average and then multiplying the value of that by 2. A moving average just being the average closing price of the previous 350 days. And then it is again using a 111-day moving average. And it's just waiting until these moving averages cross over. And historically, once these two lines cross, it indicates a price peak. So if we just look at the previous few cycles here, we can see once these actually cross on each occasion has marked within just a few days the actual price peak for Bitcoin. So if we just look at the previous two cycles more specifically, we can see here as they crossed on this occasion, it was almost the exact price top for Bitcoin at just above $19,000. And again here in 2021, when these crossed, it was at the price peak at $63,500. So an incredibly simple indicator, but very effective. The second chart we're going to be looking at is the MVRV score. And if you're unaware of what the MVRV score is, I know it's a little bit of a mouthful. It is looking at the market cap of Bitcoin and the realized cap. The realized cap is the last price at which each Bitcoin on the network moved at and then aggregated, so we have almost an average network utilization value of Bitcoin. And then once we subtract the realized cap from the market cap, we just divide by the standard deviation, which is the volatility. If you'd like to know a little more in depth on how this is actually calculated and what all those values I just discussed mean in a little bit more detail, if you scroll down, we have actually done a video on the MVRV score previously, so I'd suggest checking that out. But again, a very simple chart, whereas if you just see the simple buy and sell zones that this chart presents and execute based on these, chances are you're going to have a very successful strategy. If we just look over the past few cycles, we can see this MVRV score, every time it dips into this green box here, this is usually a great indication that Bitcoin is at a discount and potentially a great area to buy for the upcoming cycle. And the same is true when we reach this red zone, but for the sell side. So once we reach this red zone, once the MVRV has climbed into this red sell box, it might be worth considering taking some profit. So how can you use both of these charts in unison to create a great and simple strategy that is very effective for your Bitcoin investing? Well, one simple way would be every time Bitcoin drops into this green buy area, every month, every week, whenever it is possible, just maybe put a little bit of money into Bitcoin, put it into cold storage, just a very simple averaging in strategy that once you've implemented, you can have some level of confidence that you've picked up Bitcoin at a relatively and comparatively cheap price. So once you've started accumulating in this green zone here, you then just have to wait a few months, a few years, however long it takes. Once Bitcoin then reaches into this red zone, maybe time to take some profit. And once used alongside the Pi cycle top indicator, you can know exactly when to either sell a large portion of your Bitcoin or potentially just start selling and taking small amounts of profits as we reach these areas. So a very simple strategy we've just gone over here using only two charts. But Bitcoin being such a volatile and speculative asset is very difficult to handle the day-to-day moves and swings and volatility that you will experience. And it can be very emotionally overwhelming looking at the charts every day and seeing the price increases and decreases and thinking how you could have sold at the exact top, could have bought at the exact bottom, etc. But it is very difficult to consistently be profitable trying to use a very complex strategy. Doing something like this, very simple, very easy, just using a couple charts we have on lookintobitcoin.com has historically been a great strategy for buying and selling Bitcoin at comparatively cheap and selling at comparatively high prices. So just to summarize, a simple investment thesis not only reduces the stress and difficulty that more complex strategies incur, but it can often improve your returns. You may have seen or experienced yourself but trading Bitcoin or any cryptocurrency is quite difficult, especially during bear markets. Taking a simplistic approach like this, just looking at a couple key on-chain and market cycle charts, we not only get a very clear image of where we may be in the macro cycle, but it can provide a very simple and stress-free way to know when we are at a relatively low price and when it makes sense to accumulate a little bit more BTC. And due to cryptocurrency's inherent volatility and speculative nature, trying to consistently time the market's frequent swings is incredibly difficult. You may have heard before, it's not timing the market, but time in the market. And Bitcoin, which has been one of the best performing assets over the past decade, it makes sense to try and hold Bitcoin for at least the medium to long term, rather than trying to constantly buy and sell, catch every price movement in Bitcoin. If you can just get in at a reasonably good price and sell at a reasonably high price, whether that takes weeks, months, or years, not only is it very simple, but it is much more effective than trying to time the market constantly. And a simple investing style like this will not only save you lots of time, as we've discussed, but often money too. A lot of people can often overlook the costs you can incur when trading quite frequently. Not only every time you trade do you have to pay trading fees and experience spread, which is the difference between where you buy and sell the coin, which really do rack up if you're trading quite frequently, but also the tax bill, another unforeseen consequence that a lot of people experience when trading Bitcoin and cryptocurrencies and anything in general. Depending on where you're located, your tax bill could really skyrocket if you're trading Bitcoin or cryptocurrencies every day, every week. If you're just buying once or twice every few months or years, it's much simpler for you and the tax man. If you like this video, then please visit lookintobitcoin.com, where you can consider becoming a site subscriber to gain access to live chats, in-depth newsletters, indicator alerts, private trading view scripts, and more, all for a fraction of the standard industry price. In the comments down below, please let me know your investment thesis. Are you using just a couple simple charts, or do you prefer and have you mastered something a little more complex? I look forward to reading them all and replying in the comments down below. Thank you very much for watching, and I'll see you in the next one.